Hello everybody, hope you're doing alright. So after a couple requests, I want to go over SMT for a bit today. So the first thing I want to discuss with SMT, because I think that's where a lot of people get it wrong. SMT is very powerful if you combine it with draw on liquidity. But the first thing is that you need to draw on liquidity first, and then you can apply SMT. SMT is smart money technique. It's basically a crack in correlation, as ICT calls it. It's when it happens with a correlated pair, it means that either one pair is under heavy accumulation, or if we're bearish, one pair is under heavy distribution. So let's dive into it. Let's first start with draw on liquidity, like it says here. Draw on liquidity, we need some context as to why price is moving up. We're coming off of this daily bullish order block. I drop down to the 15-minute. You can see we tapped into the daily order block here already. Then we broke down again. Here is our market structure shift on the 15-minute. So the second part is also checked off. Structure is potentially aligning. In hindsight, of course, it's aligned. So our draw on liquidity, of course, in hindsight, this will be my consolidation. As well as this. Why this one? Because there's no imbalance left here. This one filled all the imbalance, meaning if price isn't rebalancing, it's taking liquidity, and it's rebalancing here this imbalance. So the next thing is PD array. I'm going to just mark the PD arrays for now. All right, these are the PD arrays that we're going to use. Now let's dive into the SMT and give a quick explanation. So what I do is I go to the plus next to the ticker symbol here, click on it, use the correlated pair. So for E-mini S&P that we're currently on, you would use NASDAQ or the Dow. Now, because of simplicity's sake, we'll just use NASDAQ only today. And Q1, I personally use new price scale. You can also do new pane. Try it out for yourself. So then you get the line chart. Now, I've seen ICT use the line chart before, which is you can use it, but the line chart only shows the bodies and it doesn't show the wicks. So what I prefer is I like to use the wicks. So I go to style, candles, and then we see NASDAQ chart fully. Drag this down a bit. So SMT is between two correlated pairs. Let's say this is E-mini S&P. It's making higher lows. Every low is higher than the previous one. Then we take NASDAQ, and if NASDAQ makes a lower low and doesn't make a higher low, then that indicates that in E-mini S&P there's heavy accumulation going on, because they should move in sync. So if we look at a chart, this is our first PD array. We come back into it. We have two swing lows here. Then if we take a look at NASDAQ, this low was lower than this low. So that's our first SMT. Now there's three ways we can capitalize on this. Either way, you enter straight away, which I would not advise because SMT is not confirmed yet. So we'll go over the other two, and the other two options are either, in this case, because we're bullish, via a buy stop, or we wait for another shift away, wait for it to come back, and we would enter on the order block left behind. So the buy stop would be as soon as we see Nasdaq sweeping below this, the candle closes, we enter, we use a buy stop on the close of the bullish candle, and they would target either this consolidation, whatever you prefer. And the next option would be wait for the shift, wait for it to come back, use this order block to enter, and use a buy limit or execution, whatever you want. So next PD array, we come into it here. We see Nasdaq making a lower low compared to this swing low, and E-mini S&P is respecting it. A lot of questions about which pair of the two do you buy. You preferably want to buy the stronger one in bullish situations. The stronger one is the one that didn't make a lower low and respected, in this case, the order block. Because this is the stronger pair, if it's stronger, it has more potential to move higher. In bearish situations, you preferably want to sell or short the weaker pair, and the weaker pair would be the one that respected the swing high. So in bearish situations, let's say this is E-mini S&P, this is Nasdaq, Nasdaq makes a higher high, we want to short the weaker pair. Next one is this opening gap that we have here and the swing low. You can see, if I zoom in a bit, that Nasdaq traded into the gap while E-mini S&P didn't. This is also an SMT, and this is why you have, if you're going to use SMT, you need to have a chart next to E-mini S&P so that you can scout for this SMT, because it could happen that E-mini S&P won't sweep a low and Nasdaq will, and that's also SMT. And in this case, the opening gap, E-mini S&P doesn't sweep, Nasdaq does, so this is SMT, and you won't be surprised if E-mini S&P doesn't sweep. So here again, you would use, because this candle sweeps it, either a buy stop here, wait for the next candle to buy, whatever you prefer. I personally prefer the third method, which was wait for a shift, and then once it comes back into it, then buy. Alright, our next PD array will be this one. Come back into it, Nasdaq makes a lower low, E-mini S&P makes a higher low and respects the order block. So we buy this one or wait for a shift, comes back into it and buy here. Then the next PD array was left behind is this one. Again, Nasdaq makes a lower low, E-mini S&P higher low and respects the order block. So the thing with SMT, it's very powerful. You have to understand when to use it. This is probably the most powerful way of confirming a PD array, any PD array, and you have to use it in context. If you're not going to use it in context, you're going to get confused, because, for example, if we remove the drawings right here, you can also see we have SMT on the highs here, but our drawn liquidity was suggesting that we're bullish. So if we just look at SMT without any narrative, without any context, we would be confused and we will get lost and most likely take unnecessary losses. I hope this was insightful. If I missed something, let me know down below or in my Telegram, or you can always DM me on Twitter or Insta. The links are in the description. Thank you. I'll see you at the next one. Bye bye.